Issue really is that the U.S. taxes its corporations on a worldwide basis. So what that means is that when an American company repatriates profits from Canada to the U.S., it pays the 35% American tax rate on those profits minus a credit for whatever taxes it has already paid in Canada. So as long as Canada's corporate taxes at both the provincial and federal levels add up to at least 35%, that provides enough credits to meet all of the U.S. tax obligations. If, however, Canada cuts its corporate tax rates below that 35% threshold, we run the risk of just redirecting tax payments from Canadian governments to Washington.
Now, this has been a long-standing policy in the United States of taxing American corporations for the difference between what they pay in foreign jurisdictions and in the United States. What's new here? What has Obama done that's new?
Well, you're absolutely right that this is a long-standing feature of American policy, and the response to it from Finance Canada, which of course was keen to cut Canada's corporate taxes, was that American corporations could exploit all of these loopholes to avoid actually facing the 35% U.S. federal tax rate on their Canadian profits. What's changed now is that Obama has proposed a bunch of corporate tax reforms that would close those loopholes and ensure that American corporations actually do pay at least the U.S. tax rate on their foreign profits.
What's the likelihood of these changes going ahead legislatively in America?
Well, it's hard for me to really judge that. I mean, Obama seems firmly committed to them. They were part of his core campaign promises to try to remove any tax incentives for American corporations to shift jobs from the United States overseas. So it would be pretty notable if Obama didn't go ahead with these reforms, but one never knows, given that corporate America is, of course, a powerful force and has lots of lobbying resources at its disposal.
Sure. Now, the Harper conservatives in their budget, was it in '08 or this year? I guess it was in '08. They laid out a series of corporate tax cuts to be phased in over a number of years. Is that not right?
Well, there's been a number of rounds of corporate tax cuts. The very first one was in the year 2000 with Paul Martin's budget. Then there was another round initially proposed by the Paul Martin government as Prime Minister in 2005, removed from the budget by an NDP amendment, but then ultimately implemented in the first Conservative budget in 2006. And then, yes, as you say, in 2008, there was a third round of federal corporate tax cuts, and that, of course, is on top of fairly significant corporate tax cuts at the provincial level. Notably, Ontario's last budget is proposing to cut all the way down to 10%.
So you mentioned a 35% threshold for American corporate taxes. They will take back from American corporations anything below 35% that they're paying in foreign jurisdictions. How much below 35% are we going on a province-by-province basis with the kind of corporate tax cuts that are being brought in?
Well, I'd say this year, 2009, in Ontario, the combined federal-provincial rate is 33%, so it's only a little bit below that American threshold of 35%. However, if you look at the corporate tax cuts that have been announced between now and 2013, the federal Ontario rate is going to go down to 25%, which is fully 10 percentage points below the U.S. threshold. Some other provinces already have corporate tax rates of only 10% or are on their way there. The federal rate's going down to 15%. So this combined rate of 25% is not specific to Ontario, but could in fact be in effect in a number of provinces.
So if a corporation is taxed at 25% by a combination of federal and provincial taxes, then there's a gap of 10% between how they're being taxed in Canada and what the U.S. Treasury will require from them. Strikes me as could cumulatively be a huge amount of money from corporate Canada.
I think so, particularly given that a large part of what you describe as corporate Canada is in fact U.S. corporations that operate in Canada. Those are the entities that would be affected by this Treasury transfer. And yeah, you're absolutely right that the direction we're headed is that those corporations would pay 25% of their profits as tax in Canada, but then they would pay a further 10% of their profits from Canada back to Washington. So it is pretty substantial. Data from the Internal Revenue Service would indicate that back in 2003 or 2004, this Treasury transfer from Canada to the U.S. Was already in excess of $1 billion a year. So with Canadian corporate tax rates headed far lower in future years, I think it's reasonable to fear that this Treasury transfer could get far more expensive.
Have you done any projections in terms of actual numbers? What are you anticipating on a year-by-year basis?
No, I haven't done those kind of projections. I mean, there's a lot of variables one would have to consider to really come up with a hard number. But, you know, given the fact that there was already a bit of a Treasury transfer happening before our tax rates were much below this American threshold, I think it is reasonable to fear that it could certainly be in the billions of dollars afterwards. I mean, certainly the total profits of U.S. corporations generated in Canada are in the the tens of billions of dollars every year.
So once Obama closes these loopholes, then Canadian corporate tax cuts will basically be sending corporate taxes to the U.S. Treasury.
Yeah, that's right. I mean, I think that could have been happening already, but I think that Obama closing the loopholes really ensures that will be the result, that Canadian corporate tax cuts, won't be increasing the after-tax profits of U.S. companies here. They won't be making Canada more competitive in terms of attracting investment from U.S. corporations. All they'll be doing is redirecting those tax payments south of the border.
And I believe the federal Liberal Party is committed to the same corporate tax cuts as the Conservatives, are they not?
Well, they are, and indeed, recently they suggested they were committed to cutting corporate income tax rates even deeper than the Conservatives. So, who knows? But there really isn't much to choose between the two dominant federal parties on this file.
Do you think that either of these parties, do you think anybody's aware of this implication, or is this something that's going to come as a big shock when the news comes out?
Well, people should be aware of this implication. I mean, Finance Canada acknowledged this dynamic in its 2008 tax expenditures and evaluations, but then said it won't actually happen in practice because all of these loopholes will allow American corporations to get around the U.S. tax rate. Well, it seems to me Obama has just pulled the rug out from under that, so presumably Finance Canada should reevaluate its corporate tax cuts. Also in 2007, the Globe and Mail reported this as a reason why the Conservatives perhaps didn't cut corporate income tax rates further in their 2007 budget, but of course then the Conservatives did so in their 2008 budget, and the Globe didn't say anything. So, this idea and this argument has been out there for years, but it just doesn't seem like the government or the leading political parties have really taken it to heart.
Well, of course, they didn't have Barack Obama as president of the United States then. What's your advice to Jim Flaherty or John McCallum or anybody else making decisions at the Conservative or in the Conservative or Liberal Party at this point?
Well, I think the obvious policy implication here is that Canada should try to maintain a combined federal-provincial corporate income tax rate of at least 35% to make sure that we keep the revenues in our country rather than just transferring them needlessly to Washington. The way to achieve that could be modestly higher federal corporate income taxes, it could be modestly higher provincial corporate income taxes, or it could be some combination of the two. But I think a very logical first step would be for both the federal and provincial governments to cancel scheduled future corporate income tax reductions, so at least they don't make the problem worse.